Something unusual is happening around the Iraqi dinar conversation, and today we are going to slow everything down, separate noise from facts, and look at what truly matters for serious Iraqi dinar holders. Over the past 24 hours, claims have been circulating about a so-called digital dinar climbing, rumors about suppressed forex rates, talk of coordinated political timing, bank red carpets, war as a cover, and even suggestions that a rate is already loaded somewhere in the system. For anyone invested emotionally or financially in the Iraqi dinar story, this kind of information can trigger excitement. But before we let hype drive expectations, we need to apply economic logic, banking reality, and verified data. First, let's address the idea of a digital dinar trading at elevated levels on retail platforms. As of now, the official exchange rate of the Iraqi dinar published by the Central Bank of Iraq remains in the range of approximately 1,300 IQD per US dollar, which equals roughly 0.076 USD per dinar. That rate is publicly visible through standard financial data providers. There is no internationally recognized, freely tradable digital Iraqi dinar listed on major regulated forex markets at $1, $4, or any similar value. Sometimes platforms list synthetic pairs, test tokens, or thin liquidity instruments that can display abnormal price spikes. Those movements do not represent an official sovereign currency revaluation. In global finance, an actual revaluation of a national currency would immediately reflect across central banks, interbank markets, and international financial terminals. It would not appear quietly on an isolated retail screen. Now let's talk about the idea that the rate is suppressed on Forex at a higher number like $4.81 and simply waiting for political timing. From an economic perspective, currency values are not hidden inside the system waiting for a ceremonial release. Exchange rates are determined by supply and demand, central bank policy, foreign reserves, trade balances, inflation, and international confidence. If Iraq were to officially change its exchange rate policy, that decision would be publicly announced by the Central Bank of Iraq and reflected in global financial markets within seconds. There is no technical mechanism by which a $4 rate could exist in the background without appearing on Bloomberg terminals, Reuters feeds, and global bank trading desks. That does not mean Iraq's currency cannot appreciate over time. It means appreciation would have to be supported by fundamentals. So let's examine those fundamentals. Iraq's economy remains heavily dependent on oil exports. When oil prices rise, government revenue improves. When oil exports are disrupted, revenue suffers. Reports about tensions in the Strait of Hormuz and regional instability directly affect Iraq's fiscal stability because oil exports are its primary source of foreign currency inflow. If shipments are slowed or halted, Iraq loses daily revenue, which places pressure on the budget. A country facing export disruptions and revenue uncertainty is not in an ideal position to dramatically revalue its currency upward. Stronger currencies require strong, stable inflows of foreign reserves. At the same time, Iraq has made progress in stabilizing inflation compared to previous crisis years. Lower inflation is positive for long-term currency credibility. The central bank has also been working to modernize payment systems and reduce dollar cash usage inside the country. However, reducing domestic dollarization is not the same thing as making the US dollar illegal, nor does it automatically create a revaluation event. It is part of a monetary reform process aimed at strengthening the dinar's internal role in transactions. Now let's address the banking question directly, because many viewers are asking, if a revaluation happened, would banks accept Iraqi dinar? Currently, most U.S. and international retail banks do not actively exchange Iraqi dinar because it is not widely traded in global forex markets and carries limited liquidity. Large international banks typically deal only in currencies that have active interbank markets. Credit unions and smaller institutions often do not handle exotic foreign currencies at all. If Iraq were to achieve full international convertibility with a freely tradable rate, then major banks that operate foreign currency desks could potentially exchange it, just as they exchange other emerging market currencies. But that would depend on official recognition, liquidity, correspondent banking relationships, and compliance rules. It would not be automatic overnight at every branch on every corner. There is also discussion about government formation and political timing inside Iraq. Political stability absolutely matters. Investors, international institutions, and foreign governments look closely at whether Iraq has a seated government, a functioning parliament, and clarity on laws such as the hydrocarbon law. Political paralysis can delay reforms. However, even if a government were fully seated tomorrow, that alone would not justify a sudden jump from fractions of a cent to multiple dollars. Structural economic strength must support the rate. Another topic circulating is the long-discussed project to delete the zeros. Historically, Iraqi officials have spoken about redenomination, a process where large nominal notes are replaced with lower denominations by removing zeros while maintaining purchasing power proportionally. Redenomination is not the same as a windfall revaluation for holders of existing currency. It is an accounting adjustment used by countries that previously experienced high inflation. If implemented, it would require careful public education, legal steps, and international coordination. It would not secretly enrich foreign speculators while bypassing global financial institutions. Claims that 90% of cash has already been collected into banks and replaced one-to-one with a digital dinar are not supported by verified public data. Iraq is expanding digital payment systems, but the country still operates largely with physical cash. Transitioning an entire national currency base into a fully digital system would require massive infrastructure upgrades, cybersecurity frameworks, legal amendments, and international compliance standards. That process would be visible and documented. The idea that a war or geopolitical crisis could serve as a smokescreen for a currency revaluation also deserves careful thought. In reality, markets become more cautious during war. Investors typically move toward safe haven assets like U.S. Treasuries or gold during high uncertainty. While gold prices can fluctuate for many reasons, geopolitical tension usually increases volatility rather than creating the ideal environment for launching a major currency reform. Central banks prefer stability and predictability when adjusting exchange rate regimes. Let's also examine oil prices. If Brent crude rises above $80 per barrel, Iraq's revenue position improves. Stronger revenue supports budget execution and foreign reserves accumulation. Over time, higher reserves can support exchange rate stability, but appreciation, if any, would likely be gradual and policy-driven, not an overnight leap to multi-dollar territory. For serious Iraqi dinar followers, the real indicators to watch are these: official statements from the Central Bank of Iraq, changes in exchange rate policy frameworks, IMF reports, foreign reserve levels, inflation data, progress in banking sector reform, anti-money laundering compliance, and WTO accession steps. These are measurable factors. They move currencies. It is understandable that many people hope for a life-changing event. The dinar story has been circulating for years, but responsible analysis requires separating hope from evidence. At this moment, the publicly visible IQD USD rate remains near its managed peg level. There is no confirmed international announcement of a reinstated multi-dollar rate. There is no verified proof of a hidden forex rate waiting behind the curtain. That said, Iraq's long-term economic trajectory is still important. Continued oil production, infrastructure development, political stabilization, and financial system modernization could strengthen the dinar over time. Economic reform is a process, not a surprise event. So where does this leave dinar holders? It leaves them in a position where patience, realistic expectations, and independent verification matter more than viral headlines. If major changes occur, they will be announced by credible institutions and reflected instantly across global markets. Until then, every claim should be tested against economic logic. As always, stay informed, question bold claims, and focus on verifiable data. This report is for informational purposes only and should not be taken as financial advice or a guarantee of any future currency movement.